morning everyone, Sunday analysis here, just going to have a look. There's only 3 pairs that I've identified this weekend with some potential, so we're just going to take a quick look at those. The first of which is Aussie JPY, so we're just going to have a look on a weekly chart. So what we've got here, so this is last week, we've got a doji. So the previous week, which is probably more relevant, was a big push down, and then you would have expected price to continue short, although a doji is a real sign for price just pulling up. So there's indecision in the market on a weekly time frame. So what I'm going to do is just drop back to the daily for a second. Now this is interesting because this is a pattern we identified earlier than last week. So we'd identified previously left shoulder and a potential head. And then last week on the close we would have expected price to push into these levels if the weekly pattern was going to continue. But the doji on the weekly pattern is starting to set up what is potentially a right shoulder, a reversal left shoulder, head and right shoulder pattern. So my technical analysis is going to tell me that price is probably going to push up through these levels, going to break the neckline, come over the top and then continue long and make a heads and shoulders pattern in its entirety. Okay guys, we're going to skip up to pound JPY, which is our next chart that we really want to have a look at. So we'll just jump up to the daily to start. Alright, so what we've got, this is a weekly chart. So we can see overall it's an uptrend, but I think it's come away from the support at the moment. So you can see from fractal high to fractal low, price has come up really strong here, and it's turned over at this 61.8 Fibonacci level here. And again, prices come all the way back up into this retracement and then push down for a close under the 50% retracement level. So my thoughts on a weekly chart for pound JPY is it's still a short market just for the short term down to this uptrend support line here. Okay, so what I'm looking for, and we'll drop down to the H4, but I would expect price to open and come up into about the 50 or 60%, 61.8% retracement of this pin bar and then continue short just in the next few weeks. So what I'm looking at on H4 is we'll skip across there now and have a quick look. So now we're inside the weekly pin bar. So you can see guys, we've got this uptrend, 1 touch, 2 touch, 3 touches and a break on the 4th touch. And now we've got a new structure low here and then it's broken the structure low. So we've got a break. So I'm expecting, regardless of the weekly pin bar, but I'm expecting price to retrace into these levels for a retest of this break of this uptrend, which will correspond with the weekly 50% or 61.8% Fibonacci retracement level. So there is a few trades in here. I will just, excuse me, I had to move these out of the way for the weekly chart. So trade number 1, what I would like to see is price come in here, a bit of price action. I'm going to trade this retracement into this breakout. So it's a 180 pip move long. I'm going to put a 35 pip stop on it, which gives us a 5.14% trade. Excuse me 1 second, I'll just bring trade number 2 into the spotlight. Just bring that down here. Sorry guys, just had to move that out of the way for the weekly chart a minute ago. Okay, so trade number 2, once price gets into these areas, which is a retracement into the weekly pin bar, and it's also a 3rd touch of a downtrend channel, and it's also a touch of the breakout retest pattern. So we've got 3 points of confluence, and now that's going to be potentially a 260 pip move down to these levels here with a 35 pip stop, gives us a 7.4% trade. Depending on how you feel, depending on how bearish you think this market is, it could push all the way down to this daily uptrend support, which 480 pips, which corresponds not far under the 23.6 Fibonacci retracement. So that could be a 400 to 460 pip trade there, guys. Same amount of risk, 35 pips, which could get you in a very nice trade in terms of risk to reward. Okay, the 3rd and final trade that I can identify this week is pound New Zealand. Okay, so this is a weekly chart. So we've got, if we just zoom out a bit, excuse all my notes on here, but this is a resistance area through here. So we've got a weekly touch, a 2nd weekly touch, and a 3rd weekly touch. So price open to come all the way up through this levels, and it's pushed all the way back down and closed below again. So on a weekly chart, we've got a nice bearish pin bar in here. Okay. Also, we have got lower lows on the RSI with a 7-period moving average, which tells us there's a bit of bearish divergence. Now, I don't generally take bearish divergence into account, but on a weekly chart with 3 touches on a resistance area, I certainly will have a bit of a look at it. So it just gives me a bit of extra confidence in the trade. So we just zoom back in. So this weekly pin bar, again, I never trade straight off the pin bar. I am expecting a short pattern, but I would like to see retracement up into this 50% level of this pin bar. So we skip down to the H4, we'll see a bit more of a pattern emerging. Okay, this is good here, guys. All right, so we've got a left shoulder, a head, neckline. So my first trade here, touch the neckline. I'm going to trade long into what I think is going to create the right shoulder. This is a 150 pip move long with a 40 pip stop loss. Now the reason that stop loss is a little bit bigger is because the spread on pound New Zealand is generally a bit higher. So I always take into account the spread. So that's the reason for that. Pound JPY has got a smaller spread, therefore a smaller stop. So trade number 1, up into this potential right shoulder. Trade number 2, I'm looking at this shoulder to form, which is the 50% retracement of, remember, a weekly pin bar, which is the bearish divergence, which I would like to see go short. I will trade this all the way down through the neckline, back for a retrace, and then down to this level, which is our heads and shoulders target pattern. So remember, neckline, depth of the head, out the other side. So 370 pips there, plus the 150 pips into the right shoulder, the potential right shoulder, 575 pips, again with a 40 pip stop. Gives us the potential for a 13% trade. So that's another good one there. Now the third trade is going to be once the shoulder is formed, it comes down, breaks the neckline, and comes up and retraces on the other side. So retest of the neckline, I will get short again for the 325 pips that we measured, which will give us trade number 3, again with a 40 pip stop. So 325 gives 8.1%. It's got trade 1, trade 2, and trade 3. There's some potential trades again. If we look back at the pound JPY and the Aussie JPY, it's going to potentially be quite a good week in terms of opportunities. Now, what I will say is we've identified at least 6 opportunities to trade this week across the 3 pairs. Now, I'll only trade these if we get price action in these areas. I say this every week. It might sound like I'm repeating myself, but I'm repeating myself for a good reason. I've been doing this a long time, and it only pays to trade if you get price action in the areas that you've pointed out. Now, you need to identify these areas before price actually gets to them also. You can never just switch on your charts and trade. It's very difficult to just switch on and see a pin bar that has no context in the bigger time frames and just trade it. It's high risk. So that's why I like to look at things earlier. All right, guys. Now, another note I will make. So pound across the board has put in some very strong pin bars and bearish engulfing bars, so on a weekly time frame. So just have a look at those, because there are other price actions on weekly time frames on the pounds that are quite good. The JPY and the NZ are my 2 favourites. The other point I'd like to make is on Tuesday, it's the end of the month, so we're going to have a monthly close. So there's going to be some high time frame analysis done on Tuesday this week, so keep that in mind, guys. A lot of people do their analysis on the weekend and they get stuck on H1 charts, H4 charts and daily charts. They forget about the high time frames. They get tunnel vision. So it always pays to remember, okay, so it's the end of the month on Tuesday. Let's wait for that close and then do some really strong analysis, high time frame technical analysis on the Wednesday morning. So that's just a reminder. I hope you guys have a look at that. And I wish you guys all the best in the trading to come. All right, guys, I will talk to you probably during the week, but again, certainly on next Sunday. All right, guys, happy trading. Hope you make some money. I'll talk to you soon. Okay, bye.